So the panel now is going to be about investing in tokenized assets. I'm Adrian Alvarez, the CEO and founder of InvestReady. We verify accredited investors for issuers and platforms doing Reg D 506C. If you have any idea what that means, you probably are in the right panel. Just to start, I would say a lot of the beginning energy in 2017 in the crypto world revolved around ICOs. There was a huge influx of new investors, new people getting situated with tokenized investments, and ever since then, there's been people doing it in a way that is compliant with regulatory procedures and sometimes not, as we've seen. Most of the panel here and everybody that mostly in this conference has been doing it the right way, and we want to have a conversation about where we are at today. So I'll just go around the room and everybody introduce themselves, and then we'll get into it.
All right, awesome. Thank you. My name is Ryan Zega. I'm the Senior Director of Business Development and Capital Markets at tZERO. Here at tZERO, we provide capital raising and secondary trading solutions for private companies, real estate assets, basically your typical e-liquid, high barrier to entry private placement. We have a number of broker-dealers that support those. One of our backers is the New York Stock Exchange's parent company, Intercontinental Exchange. So great to meet you all.
Hi, my name is Shari Noonan. I'm the CEO and co-founder of Rialto Markets. Rialto Markets brings private companies to the public, and we do that through working with single issuers, through working with marketplaces, and through working with private credit and private equity funds. And we do that across all in a securitized format.
Hi, my name is Andrii Zamovsky. I founded multiple companies in the space. The first, more well known, is MBSafe, which facilitated a lot of initial token offerings since 2017. And then we started to specialize in private equity and securities trading. And so the other one is Orderbook, which is private equity trading marketplace. And Tabla is an on-chain cap table management solution.
I'm Matt Melbourne. I head up go-to-market and sales at Republic. Republic is the operating system for the private markets. Most people know us for our private markets marketplace, and have been at Republic and in the space for almost 6.5 years now.
Hi, my name is Richard Johnson. I'm the founder and CEO of Texture Capital. We're a FINRA member, SEC-regulated broker-dealer focused on tokenization of securities. We help clients raise capital through Reg A, Reg D, Reg CF, Reg S, and we have an ATS, alternative trading system, for secondary trading.
All right, so before we get into it, how many people understand the private securities thing and the exemptions? And when I say like an exemption, you know what I'm talking about? Like, raise your hand.
One hand? Oh, okay.
Okay.
One.
So we can get a little bit technical with our jargon here. We don't have to go around it. So I guess the first thing I want to ask is, and we'll go around the room, what do you think the biggest challenge is in the current regulatory environment to actually fundraise these days and actually get an asset tokenized in a legal way? Why don't you start, Shari?
Okay, I can start.
Let's put you on the spot.
I actually think, the biggest challenge is having an investable asset first and foremost. So start there, table stakes. But there are now pathways where there's been regulatory clarity, and we were actually talking before this panel on where we're seeing the most growth in our respective businesses. And I think we would all agree that there are a number of specialized marketplaces that are coming to market, and that's really resonating with the public. But issuers that cultivate communities, and those communities then are investing in assets that are interesting to them, whether that be music rights or other things, that's definitely a space that we've seen tremendous growth in, and that's working right now.
My perspective is that tokenized securities offerings and related platforms, they still lag pretty far behind of the DeFi marketplaces. When you already have a crypto in your wallet, it takes maybe 30 seconds to go and buy some meme coin. While if you want to buy like a tokenized stock through any of our platforms, in best case, it's probably going to take at least 10 minutes to go through all the KYC and onboarding procedures. And the Web3 and crypto community, they have certain expectations that anything that they trade should be easily tradable through MetaMask with like less than a minute onboarding. So I think the challenge is to make this complex, compliant systems look as friendly and like slick as typical DeFi trading marketplace.
I think to Shari's point on the quality of the asset and bringing those to market, I think one of the reasons why it's been difficult to do that in a tokenized way is the lack of clarity with custody rules. And you see that even with crypto custody, and yesterday's House, the bill passed in the House to allow banks and other financial institutions to custody crypto, as well as the custody of securities and traditional securities. There's a lack of clarity there in how those securities can be custodied and applying a tokenization framework on top of that. And I think all the players are approaching it in a different way, and it's going to take a little bit of trial and error with the regulators to figure that out. But I think that often, once a high-quality issuer or an owner of an asset gets to one of our platforms and their lawyers are asking, well, how does this aspect of it work with regards to custody of this tokenized asset? I think that's often where some of the hesitation can come from because of that lack of clarity and a definitive path forward on how tokenization and custody of securities work.
Yeah, these are good answers. I'm thinking, so, what are the challenges here? Well, what I think a lot of us are doing is we are using tokenization to bring new types of asset classes to market, alternative asset classes, those that were previously only accessible to institutions, whether it's music royalties, fine art, certain types of real estate, etc. So from an issuer's point of view, they need to figure out what is the exemption. They need to kind of figure out what the regulations are, first of all. And what exemption do they want to use? Is it make sense just to do a regular 506C, Reg D 506C? If they're targeting a smaller number of accredited investors, that would make sense. Do they want liquidity? If they want liquidity, maybe it's not the best way to go. They need to look at something like a Reg A. But then there's an SEC qualification process, which is maybe 6 months and more legal fees and so forth. And then maybe would a Reg CF be appropriate, which is crowdfunding. You can only raise up to 5 million, but it's less onerous from a filing perspective and can make sense in certain circumstances. So I think that there are a few considerations from the issuer point of view. And from the investor point of view, notwithstanding the things my colleagues here have said, these are new asset classes that they're probably not used to investing in, and I think they need to kind of educate themselves and figure out where, I've got a tremendous opportunity here to diversify my portfolio away from the S&P 500 or whatever, but how do they want to do that? What makes sense for them? So there's a journey we've got to go through here.
Yeah, and I think Richard makes a good point where the educational effort is almost twofold. One, it's on the nature of the security, right? How are you going to offer it? Who can you raise capital for? And then the second is a tokenization element. And then depending on the client, it seems like you may lead with the tokenization or you may lead with the security. And then, yeah, with the underlying investor, it's basically not alienating them either, right? So with a lot of the LPs that happen to be in some of our issuers' cap table, maybe they're used to a more traditional type of environment, right? You're a normal retail brokerage. We operate a retail brokerage called tZERO Securities, which feels like a Robinhood, feels like a Schwab. And yeah, you're kind of bridging that gap from a knowledge perspective, whether it's an investor or an issuer.
That makes sense. And what do you guys think, what gets you excited about tokenization today? Like what's happening that's new that can actually, be a positive towards what we're doing as opposed to kind of having everybody scared of Gensler the entire time?
Well, I think the two biggest use cases we see are either issuers trying to get to a new distribution network or create new distribution networks, whether that be down to unaccredited retail or to middle market firms that aren't economically viable in another way, or to create completely new product. So if you think of the ETF space in the public side, 30 years ago that wasn't economically viable because it was too challenging. Once things went electronic, once we're starting to put everything on digital rails, now you're able to create really interesting new product. And that's what's most exciting for me in this space, is really seeing the evolution of that in the private and alt space.
Well, I think the opportunity is what really excites me. So I'm a market structure nerd. I spent a bunch of time in TradFi and in electronic trading, and as a market structure analyst for a few years as well. And when you think about capital markets, what are you doing there? What's the fundamental role of capital markets? And it's about transferring either risk or value from people who don't want to bear it to people who do. And blockchain is a newish now solution for the transfer of value. It's decentralized. It's a distributed ledger that everyone can share. So it fits perfectly with what we've been doing in traditional finance for years. But the problem is that there's been so much legacy infrastructure that's been built up since since however far you want to go back, the founding of the New York Stock Exchange or whatever, that we've really got to build the plumbing again from scratch, but we're using this new technology, and I think we can do things better than the legacy systems. And then we can also bring in some of the new innovations that the DeFi world has introduced to us, such as on-chain lending, maybe one day even AMMs, but certainly in the nearer-term future, atomic settlement of securities transactions against some kind of stablecoin.
Mm-hmm.
There's even been, we've seen a lot of inbound at Republic for companies who want to issue securities and use tokenization to deliver some sort of utility beyond just the investment contract. So a lot of those tend to be like cultural assets, like we are tokenizing and selling a big piece of a UK soccer club, or we have a portfolio of art by a well-known artist that we're kind of structuring and selling in a tokenized way, and ownership of that investment in a tokenized way will entitle the holder to certain perks or special access from owning and holding that token, and often through the Republic wallet that we just launched late last year, that will allow users to self-custody those token assets. And basically, we have functionality for the owner of that asset or the issuer of that asset to token gate access to certain perks and privileges and special things that make purchasing that asset even more exciting beyond just the investment itself.
For me, it's democratization of access to market and financial inclusion. Now people from developing countries, Eastern Europe, Argentina, you name it, can co-invest in like early stage Bay Area tech startups with Andrii and Sequoia and other like tier 1 VC funds without ever having been having to visit the US. Previously, before blockchain, it was impossible. Like you had to be either in San Francisco or New York, and you had to know the people, have connections, etc. Now you just need to read a lot, educate yourself. Doesn't matter where you are anymore.
Yeah, and I think that heightened level of investor engagement is something that we're seeing a lot of. If you have a extensive fan base, client base, user base, actually activating them through the issuance of a security, and then being able to work with that investor base to get them to be better fans of your sports team, or more actively involved with new clothing launches, wineries, distilleries, etc. So I think that's a really cool sort of area of opportunity that goes beyond just the levered IRR or cash flow multiple. And I come with a traditional real estate background, so kind of engaging with your client beyond that for an experience, I think, is something that is hopefully that's pretty huge.
Well, if I can just add on as well, because I totally agree with both of your statements. And I also think investors are looking to be excited by something. So you're always going to have your S&P exposure, you're always going to have your traditional exposure, but going to a cocktail party and talking about owning part of a football club or owning part of a racehorse is a lot more exciting than going and talking about owning IBM, right? So that's where, activating the community, I love that phrase, and really galvanizing individuals around different brands, I think is going to become more the case in the future.
No, definitely. Community is so important. Besides community, have you guys seen an uptick in institutional buy-in? Like we've seen the BlackRock ETF and the excitement around that, and the Biddle fund that they just did with Securitize. Is the level of institutional buy-in growing, and then how is that affecting the market?
Yeah, so I think it might go into the distribution side, right? We've worked with a number of larger institutions where they're like, how do I get that lower accredited investor to participate in particular private placement, funds, whatever it may be? And then from what we've heard, right, the main conflict is liquidity. You think about your traditional private placement, whether it's a real estate asset, a fund, you may be stuck to a 5, 7, or 10-year plus hold period with little to no liquidity options. And even if you look at like a open-ended REIT structure, right? It's it's a broken structure. So kind of floating the equity, allowing for secondary trading could be something that, may help distribution in the future.
Okay, so I think we need to be real here. There's hardly any institutional activity in our space, the security token space, or in crypto. Let's be real here. There's more where we are. BlackRock is, I think going to be a game changer, a real inflection point. I know that Wisdom Tree and Franklin Templeton and so forth have forged that path before. But it's not really happening. It hasn't really happened yet, which is why we were talking upstairs. We're all so excited, and we've all noticed a tremendous uptick in literally the last few months. And it took Larry Fink, the world's largest asset manager, to do it. I have a theory that BlackRock is not that old of a company. It's not a generational company or anything. It's 20, 35 years ago or whatever. And it's become the world's largest asset manager through ETFs. He pioneered ETFs, and basically BlackRock's been eating the lunch of every other asset manager out there over the last 30 years. So my theory is that there's a lot of asset managers who don't have 7 trillion, but maybe they have 250 billion to whatever, a trillion or two, are looking at this space now and thinking, excuse me, shit, he's gonna do it again, and I need to get into the space.
I was going to say something similar about the activity, which is that there's been effectively none, and a lot of folks are pointing to the Biddle Fund and Securitize BlackRock going to market with that. And the reality of that is they're looking for, to Shari's point, new distribution and access to new capital pools. But at the end of the day, that fund went out with, in that offering, with the same restrictions on suitability. So participants need to be qualified purchasers, and the minimum investment size, at least at first, was $5 million, and you needed to be a qualified purchaser, which is 0.001% of people or entities in the U.S. So where the interest that I've seen from these asset managers, it's really picked up. Even though the activity is basically zero, the interest in the past few months, to Richard's point, is really picking up, and they're all interested in retail distribution and access. They're saying, how can we bring these products to market to retail, like true, even non-accredited retail, to Shari's point, Ryan's point. And where we run into issues are the Investment Company Act rules, which are extremely restrictive on suitability. So, number of holders in a fund and what their suitability or their suitability threshold is. So it's going to be really hard to overcome those.
Yeah, I agree. That's with Matt. That's the reason there is no retail like tokenized products in the US exactly because of that like limits to the number of shareholders. It's a very simple rule that like breaks everything. Not sure if it's necessary there. We specialize mostly in smaller investors outside of the US, so I can't comment too much on institutional activity in the US, but ironically there was also uptick in like interest from smaller funds in Europe in our products. They also like it mostly because of the liquidity. They don't have to hold for 10 years. They can buy and sell in small chunks anytime. So same financial inclusion also applies to smaller funds, family offices, etc.
I agree with everything that's been said. What I'd like to stress is most of the institutional uptick that we've seen has been trying to get to either true retail or to not economically viable channel right now. So a lot of these players in the institutional space have filled the wallet, for lack of a better term, but have their allocation from the larger funds, and so they're looking at how do we expand, how do we continue to grow. There are only so many different ways that you can grow. One of those are new distribution networks.
For sure. So do you think then, is the US falling behind the rest of the world in terms of what, and we could start with you, Andrii. What do you think that we can do here to kind of increase that institutional buy-in? Obviously, we've already started a little bit of an uptick with BlackRock, but what do they do outside the U.S. that works that isn't being done here or can't be done here?
I can take on this as an entrepreneur immigrant. I can compare. Most of the European and non-US markets, they're just much younger and not so developed. They have much fewer rules as a result, like more freedom of action. Like in the US, it just has a very long history of capital markets that resulted in a lot of small nuanced restrictions that make things very difficult here. I know a lot of US co-founders, entrepreneurs that are currently trying to set up companies outside in Europe. They basically gave up on waiting for SEC to become reasonable.
I mean, yeah, I think the US is falling behind. We're a US-focused firm. It's the largest capital markets in the world by quite far. So we're not packing our bags or anything. But you look at what's going on in Singapore, for example, much more open regulatory stance, and it's very disappointing that we don't have it here. And it's not for any risk-based reasons, or he says it's investor protection. It's not really investor protection. It's all political. So it's very, very unfortunate.
Republic, we acquired one of the largest primary and secondary marketplaces, Cedars, about 1.5 years ago. And one of the things that I realized as we started that integration process was, although we tend to see Europe and the UK as sort of lagging behind or more restrictive in a regulatory sense than the US, actually in this one way, which is retail access to private markets, even with tokenization, I think there's in the UK in particular, there's actually a few there are fewer structural restrictions with regards to tracking securities, custody of securities, and disclosure requirements for primary issuances. So that's a little bit in the weeds, but like in the UK, it's easier to distribute to retail in a lot of ways. And although we're in the sandbox with the FCA on tokenized primary issuances, I see the UK in particular as a bright spot, whereas in the US we still are bumbling around in the dark in a lot of ways with regards to tokenized securities and trying to solve both tokenization and the structural questions of retail access to the private markets at the same time, and it's very, very difficult.
Yeah, and then with kind of tZERO, right, we deal within the confines of US securities laws, and on the tokenization side, right, we have issuers that may need to dial down some of their token elements in order to raise capital and or trade on our platform. So yeah, I think regulatory guidance is welcome. Yeah.
Nothing to add.
Awesome. Does anybody have any questions for the panel? we can open it up to questions if anybody has some. But in the meantime, we'll just, what do you guys see that's the next step for asset tokenization to get a greater market share, to increase the viability of it amongst the public?
I can take this one. Some unification of protocols would help. Currently, there are lots of things in the closed private blockchain sandboxes. So, like, formally it's on chain, but not really. So, if I would encourage companies and colleagues here just to put more stuff on public blockchains instead of keeping it in very restricted sandboxes, so investors can actually like trade with each other. It's not easy, I know, but it's doable. So the next step would be like secondary market for for RWAs actually coming to life, because currently there is almost nothing. And then with the secondary market, it will merge with the rest of the DeFi ecosystem.
I think we need to keep, we need to keep bringing assets on chain, getting more quality assets on. I think there was a time coming out of, the ICO situation that, a lot of lower quality assets were coming on chain. So and we're getting them. Lots of great real estate projects, lots of really tokenized money market funds and so forth coming on. So we're getting there. That's happening, and we need more. What I'd like to see is more complex products. So I think structured products is a great area that we're beginning to have discussions on. And the reason I mentioned that, I think there's tremendous opportunities for cost savings, and that's something that's really going to move the dial for banks. They're like, wait a minute, I can save 30% of my costs if I tokenize this. So that's going to be, I think these types of things, and we're all working towards it. So we're going to be seeing a lot of interesting things in the next couple of years.
And I think there's at least from the green room, right, there's a strong level of collaboration between people that play in a very similar field, because, another firm's case study is a success for us as well. So kind of utilizing that to get in front of different issuers and then, sort of substantiate this, concept of tokenization to investors is, super helpful. So, I think we're all kind of charging towards the same goal.
No, I agree. So Richard and I were both in the electronic trading space early back in the day, and you saw different marketplaces, different ECNs they were called back then, 10, 15 of them, and then there were consolidation phases, and then eventually there was that tipping point across the chasm, and so the incumbents had to adopt or die, and we're slowly getting there, but slowly.
Another challenge that I can throw in here, I think the security or RWA market will be kind of production ready once most of the investors can buy the products using MetaMask or any other open source wallet. Currently, it's not quite there. You have to go through weird steps to acquire most of those tokens.
Let's see. If there was one change in the law that you could make, like if you're now Gary Gensler, you're the head of the SEC, and they come to you and say, hey, we got to solve this tokenization thing in the U.S. What's the one thing that you would do that would hopefully move the ball forward?
I think a pathway for investment companies, for funds, to accept retail participation without having to publicly register. I think that would allow for really high quality assets to be managed in a fund structure, and that fund structure allows for quality managers to manage an asset. And I think that's one piece here that is the current rules, Reg CF, Reg A+, largely prohibit investment companies from using those exemptions to raise. So like non-accredited people are restricted from like almost all funds that have that own private market assets. And like a good example of where it's working would be like ARK funds, that Kathy Wood's ARK fund that is sold through Titan, with a minimum of like $500. But that's a SEC registered fund, and getting that registration and going live is an extremely arduous, expensive process. So a change in the law would have to occur to make that more commonplace.
Yeah, I actually 100% agree with Matt. Yeah, if they could add one more exemption that allows funds to use the securities exemptions, that would solve a lot.
Yeah, I would agree with that, but also add in there custody and transfer agent being able to be fully digital. I sort of see it as right now we're in this space, certainly with the transfer agent side of things, where we're kind of in parallel testing. You have the on-chain, and then you have the off-chain that is also required. So being able to get through that, and let me say we love the SEC, but that certainly would help a lot in terms of just the sheer processing. I mean, all of us up here went through the digital securities registration and know the playbook that we had the hoops we had to jump through. So sort of getting to the end of that parallel testing and saying, okay, we get it. This is just a new technology deployment.
And are you guys a transfer agent?
We are a transfer agent as well.
Richard, are you guys a transfer agent?
We are not.
We aren't either. It's just interesting. I've been noticing a lot of the firms in our space, they're just standing up a transfer agent, not because it's additive in any way other than just fulfilling the regulatory requirement for tracking.
It makes the SEC happy because they want to have an official book of records maintained by a transfer agent, which is someone they can shout at or sue or whatever. And I'm going a little bit off topic, but when you asked your question, like, what is one thing? It's like 10 things popped into my mind, so it's a really, really hard question to answer, actually. And we probably shouldn't spend the whole panel talking about it. But I would say, if I had to think about it, one thing would be, what I would like, and maybe it's very self-serving, just let's have a separation and let the SEC should acknowledge that there are folks like us, like myself and Shari and tZERO and everything, who went in the front door to the SEC right in the middle of the ICOs blowing up and said, we want to do this the right way. And we were, not given an easy ride. There's been no scandals in our space at all. Everything's been done right. We're following the rules. And I think, let's have a clear separation and recognize that, tokenization is a benefit to traditional finance, and let's separate it from crypto. Not that that's a bad thing, but let us get on with what we're doing.
And I think my chief legal officer has a 10-point bulletin. It might be on our LinkedIn, so you can check it out. And I think he's outlined a number of different proposed changes.
And kind of staying on the same topic of the SEC itself, do you think that their policies and the way they've gone about it has caused some of the issues within the crypto industry as far as like going offshore and the issues, or has it done the job of actually protecting the investors thus far? Is it, obviously FTX was not in the US technically, at least that portion of it, they couldn't really protect it. Obviously they were trying to come from, or at least we can say that they were coming from a correct place, but have they hurt more than helped the industry to grow in the US? So
the first ETF application was filed in 2015, 2016 by Gemini. It's interesting fact, its ticker was going to be Coin, which is now Coinbase's ticker, but anyway. And the price of Bitcoin then was about $300. They refused it on the grounds of investor protection risk, et cetera, et cetera. 8 years later, they finally approve it, and the price is $40,000. So what were they protecting investors from?
There haven't been many policies. There were a lot of confusing announcements and executive actions, but policies seem fine. I mean, we can comply with all securities regulations in digital form. Yes, they were written for paper-based trading. They can be implemented as digital versions. I think SEC is creating a lot of confusion by just with the announcements, delays, lack of answers, basically their executive communications, not the policies.
And I think we all have to have a good relationship with our regulators, including the SEC. And I don't want to paint the institution with a broad brush. And I'd say there are some really great bright spots there, like Commissioner Pierce, who's just a fierce advocate for, I think, all of the things that we've been talking about. So, you know, don't want to comment on a whole on the institution, but would rather point out, you know, there are some really amazing players that are our champions there, and we hope to continue working with them and their colleagues on implementing some of these things that we talked about.
Yeah, I'll just actually add on to that, because when you asked the question, the first thing I went to was during our registration process. I'll call it the dark night of the soul. 2 years we worked with the SEC, and at one point we were getting some advice, legal advice, and it was, you know, listen, this is the biggest capital market in the world. They were formed for investor protection, and you don't ever hear when they say yes. It's to say no, and so I think that's the rub.
Okay, so not to beat a dead horse with Gary Gensler and SEC, but he has refused to answer this question on numerous points, so I'm going to put it to you guys.
You want us to answer it?
Yeah, if you want to, it's up to you. Is ETH a security?
Ooh.
Anybody want to jump in?
I mean,
I'm looking at you, Andrii.
it kind of doesn't matter in a way, right? Because it's a global asset, on-chain, distributed globally. The SEC can say whatever. It's not going to change how people are using it around the world.
But it will change the legal bills in the United States.
Yeah, yeah.
And at Republic, I think one of the ways that we contend with that kind of question and the different assets we offer on the platform is we do, in primary offerings, we sell everything as if it is a security. And then maybe we're not opining on whether the underlying token is a security, but perhaps the token purchase agreement or the SAFT is almost certainly a securities offering, no matter what the underlying token that you're, you know, getting access to. So.
But you don't have Ethereum then, so it's not a security.
Right, maybe.
Yeah. No, we approach it in much the same way. Everything we work with is a security, so
Right, yeah.
helps solve the
I guess we all
problem.
have that in our WSPs, I think.
Yeah, I mean, likewise, right? Our business is a regulated business, and then, yeah, legal opinions, security offerings, et cetera. So.
Yeah, another way to look at ETH is a software license that grants you access to this transaction processing network, which puts it under the FTC umbrella.
So we've, you know, in terms of regulatory clarity, obviously, that's, you know, we've had a lot of non-clarity lately. Where are some areas that there is some clarity that you see kind of burgeoning that you know, that even if in non-securities, like the potential ways that people are using, investing into these tokenized assets that may not necessarily be securities, or that are within the frameworks themselves that you see are kind of a burgeoning opportunity for people to get involved with, that, you know, like interesting use cases that you've seen in the last few years, or potentially just growing now?
Yeah, so I think the easiest space for us has been in the issuers or marketplaces utilizing Reg A to get to retail, unaccredited retail, and they're doing it through that form, which the SEC set up a suitability framework and process around, and really we're seeing, we were talking in the green room about this, we're seeing such an influx of different opportunities and different investments being wrapped and offered under Regulation A that, you know, I think it's becoming a lot more widespread, whereas maybe, you know, 3-4 years ago, it was the exception. But you know, starting last year, it's really become a much, much larger market.
And have you seen those Reg A pluses have a tokenized element, or are those mostly?
So yes, we have, and most of the investors don't even realize that there's a tokenized element.
Yeah, I agree with Shari there. Specifically, and using, you can use tokenization and also the fractionalization. You can do a Reg A offering where you can raise up to $75 million in a year, which I think they're going to increase that soon as well, which is a decent amount of money. But you can structure it as a Series LLC. So that means that, and this is, for example, what Masterworks does, although they're not tokenizing, but for them, each piece of art is put into a separate LLC, and they raise capital against each one. You can invest in an individual Series LLC. You can do the same for real estate. You can do the same for music royalty catalogs. All these different types of asset classes. I think it is one of the most interesting areas, and you can tokenize it as well.
Yeah, it's something that we have worked with a number of Reg A Plus issuers on, and then it's interesting even if you look at, because we're an industry agnostic platform like the rest of the panelists here, you look at the different approaches that the same industry, like horse racing we're speaking about, right, artwork, very unique takes on each of those industries that you would only get from someone who's a deep participant there. So yeah, I think it's the same kind of positive sentiment towards the Reg A Pluses.
One of the other things that tokenization enables is more personalized selection of investment products. Like if you wanted to invest in the music industry 20 years ago, you had to pick some music ETF, and then some fund manager would make decisions for you. Same for the real estate. And now investors, they have specialized apps or platforms where they can research specific property or specific artist and only invest in the very granular things they like. So it's more individualized investment portfolio.
We'll allow for shameless plugs at the end, but besides your own company, who in the space do you see as exemplary that you think is doing it the right way, that's setting the standard for the asset tokenization investing space and just in general that you admire within the space that maybe people haven't heard of, maybe they have, but some one or two companies that you see that are doing things the right way, that you look up to them, you see the brand, you're like, oh, those guys are doing it right. Besides yourselves.
Sorry,
No pressure.
I would actually love the leaders in the market on the asset management side, so a Wisdom Tree. I think that's really bold. They're making really bold moves and doing very interesting things and looking beyond what's happening in the public sphere, which is where they have a dominant position today. And that's, I really enjoy following their progress. But there's a handful of those companies.
I like the one from Switzerland. It's called Actionariat. They got government-approved stock exchange license, and the only way to buy tokens is through the MetaMask. The compliance layer is very thin and elegant. Everything is ERC-20, and they have very normal businesses, like some farms, manufacturing, and other things, raising $500,000 plus and trading via DeFi protocols. It's limited to Switzerland only, but it looks really nice.
Yeah, it's a personal view. It's not a tZERO view, it's a personal view, but I like some of the registered fund vehicles that have been discussed. Sweater VC is one of them. I think it's an interesting approach that a lot of fund operators or individuals kind of going off the road, they're like, how do I raise capital from non-accredited? I want to do a VC fund, a PE fund, and then due to some of the holder restrictions, right, you may have to register a product, and that's a registered product that, went through the extreme cost and time hurdle. But yeah, something that I personally find interesting.
If I can just quickly add on to that, I think we're going to start to see, hopefully, more vehicles like that come out, and then the cost to issuance, we hope, will come down.
I agree with Shari. I think it's the BlackRocks, the Wisdom Tree, Hamilton Lane, the asset managers that are going to get the rest of the industry excited about and open to considering this as a real path to distribution.
Yeah, I think I just echo what my panelists say. Like, you know, all the issuers out there, people who are pioneering the space, willing to take a risk on this new world. I think, you know, kudos to everyone.
So let's say I'm an audience member at a TokenizeThis conference watching a panel about asset investing in tokenized space. How would what do you think is the best route to get started, either as an investor yourselves or as an issuer? Like, you know, today, like, where do you think the best place is to get involved in the industry and you know, as a way to have more inclusion, or what do you think the most inclusive way for someone to get involved would be within the space, either, again, as an investor or potentially as an issuer that wants, you know, to fundraise and have a startup that's tokenized at the beginning?
Yeah, I would just start and say as an issuer, it would be to understand the different use cases available. And as Richard said earlier, really, you've got two axes. You've got who do you want to offer your securities to, and how long do you want it to take, and maybe a third axis of how expensive do you want it to be. But based on that, that's going to then help define what type of registration you're going to be going after, and what you can start to then flesh out what the product looks like.
I would suggest to actually set up an account at all the platforms that seem interesting to you and start creating a portfolio.
I think on the issuer side as well, there's a lot of players in the market right now that are claiming to be a path to access to retail in the US, outside the US, on-chain versions of totally on-chain versions of the things that we're talking about here today. But I think a lot of those players are going to lead issuers into an area that puts them and those who invest through them at risk. And I think their issuers are it would be wise to work with the players on this panel today, because we're all, you know, with the exception of Andrii as in a different area, but we're all registered broker-dealers and operate within the US framework, and it's becoming clear that that's, you know, if you want access to the US market, you have to do that. So my advice would be to work within the rules and the regs with the registered players, rather than trying to go the full degen, DeFi, you know, full on-chain route, which just isn't, it's not fully baked yet.
Yeah, but I think that's a good point, Matt. But I think, you know, the question was, I think, you know, what's the best way to kind of foster community? And the one thing that the DeFi space and the crypto space has, they have a tremendous community. They haven't crossed over to the tokenized RWA space. The term RWA itself is what, a year old or a year and a half old at this point. So I think if someone could figure out, you know, how to do that in a smart way, bring us all together here. We have the same, you know, longer term, you know, same fundamental goals. I think that'd be great for the industry, and I think they could be very successful themselves as well.
Yeah, I think, yeah, for the individual investor, right, you still have siloed liquidity amongst our different platforms, right? Different products being offered on the primary, different products being offered on the secondary market. So that's, you know, a challenge that exists. And then on the kind of capital raising side, from an issuer and secondary trading side, yeah, I totally agree with the sort of educational piece, getting yourself familiar with the different offering types that Richard mentioned, and then, yeah, kind of getting up to speed, and then likely needing counsel at some point.
Do you guys see any energy in any particular geographic region, either inside the US or in any particular countries or jurisdictions outside the US, that are more friendly to tokenized assets, but within the legal framework? Is there like a spot, like a, you know, that's hot right now in the US that a lot of this energy is going to? Is it mainly like the same hubs that we had on the tech side, or are there any up-and-coming places, either in the U.S. or outside the U.S. in specific jurisdictions that are getting popular, maybe the lion's share of the actual work for this type of thing?
There's a region that comes up nearly every week in conversations, and I know everyone's going to nod when I say it, but it's Abu Dhabi and Dubai. Someone's talking to me about it all the time. They're usually talking about, you know, a $500 million portfolio that needs to get tokenized. I don't know if they're all talking about the same one, but there's a lot of activity going on. It seems to be a lot of activity going on over there. I'll say that much. And I think a lot of the conversations are about, obviously, it's a very rich part of the world, but it's very small. And the conversation is always about building a bridge between the US and between the regulated broker-dealers over here who can distribute these types of assets. Because the UAE wants to be a world player on the finance side of things, and they want to partner with US companies to help them get there.
I had the same answer.
Yeah, would agree
Funny.
as well.
Yeah, we've seen like significantly more activity from India and from Canada. I guess the commonality is that they both are mostly English-speaking countries, and yeah, all around Europe, but no specific country that I can highlight.
Let's do a shameless plug for 2 minutes each on what you guys are building, what it is that you're able to provide into the tokenized asset investment space, and how people can learn more about you.
Yeah, basically here at tZERO, right, our two main business lines are capital raising for Reg D, Reg A+, and Reg CF offerings. We have a white label tech solution that allows for basically like an Amazon checkout experience for those capital raises. And then we'll serve as a broker-dealer of record and/or private placement agent, obviously, subject to due diligence. And then the second kind of part of our business, right, is secondary trading. So we own an alternative trading system called the tZERO ATS. And then within that platform, we also, have a retail broker-dealer that trades private companies, real estate assets. We have a fund. So yeah, it's a really kind of interesting way of democratizing access, whether it be from the capital raising side or the secondary trading side. And then depending on the product that you're using, tokenization, maybe done in the background or just maybe optional. So yeah, really bullish for this market.
No, I'd agree with that. So capital raising, Rialto Markets, we handle capital raising across all the different registration types for single issuers, for marketplaces, meaning the fractionalized marketplaces, and for funds, private credit and private equity funds, both primary issuance and secondary trading, tokenized and traditional, across all investor bases.
Our flagship product is Orderbook. It's a tokenized equity and trading marketplace that allows investors worldwide to invest in difficult-to-access US companies.
I'm sort of struck by, even when we were in the green room speaking, how similar some of our product sets are. And I think to echo what Shari and Ryan were saying, Republic is we sort of have a broad suite of licensure and ways to distribute and for issuers to raise money and for retail and institutional to invest in different products. We're a registered broker-dealer, funding portal, affiliated transfer agent, affiliated trust company, and affiliated ATS, and that kind of allows us to have that broad suite of products for issuers to raise. And what we've been able to do with that over the past almost 8 years now is almost $3 billion transacted across 2,000 plus projects and a user base of 3.5 million folks. So I think that's sort of one of the exciting parts of our story.
So Texture Capital is focused on digital securities infrastructure. We want to be the infrastructure layer for the new tokenized capital markets. We're asset class agnostic. We want to help you bring asset classes to market in a fully compliant, on-chain way. We're experts in market structure and in this technology. And we'll be happy to help anyone here looking to launch some assets.
We have a couple more minutes if anybody wants a question, or we'll just do some closing remarks. About 7 minutes on here. We got a question over here. Okay.
It's Andrii.
What is it again?
Andrii.
Andrii, thank you. You mentioned about farmers in Switzerland, I believe, on Tech One.
That's right.
Can you go into a little bit more detail about that, please?
Yeah, I don't know too many details about specific company, but you can go to actionariat.com with K, and they have like egg farms or some like chicken farms, seriously.
Are they
being,
securities?
yeah, they are securities, but they're being traded via DeFi protocols. One of the misconceptions is that if anything is DeFi, it can be compliant. It's not like true. There are multiple stock tokenization protocols that allow compliant cap tables and security transfers via existing DeFi marketplaces like Uniswap. We've built one of those. So yeah, they have multiple like non-tech businesses traded at their DeFi style platform.
Another hand up. Have a gentleman there.
Super interested in the music licensing aspect. A couple of you brought that up. I think two of you. Would you comment on sort of what that structure looks like? Is it traditional catalogs moving on chain? Is it new catalogs going on chain?
So it's all types of catalogs going on chain, and really they're doing it for a couple of reasons. One, to allow their catalog to be purchased by fans, by the fan base, and have the fan base be connected more to the specific music genres. And two, to handle all of the operational royalty stream distributions in a cost-effective way. And really, I think most of us here on stage see it as the future in terms of brands being able to work with their fan base, the fan base to be able to participate and actually gain some value from that connection as well. But that's what we see. And it's all types of genres. And so I'll let you speak.
And I think one of the interesting pieces structurally to that, and I agree with everything Shari said, is the innovative structures in which the IP or the asset itself isn't changing ownership. Like, we're not changing who owns the music right. They're just tokenizing economic rights in that asset so that you don't have this fractionalization problem where 1,000 people own the right to the songwriting right to a particular song, but instead it's just that economic right that you don't have that you don't have the issue of trying to bring those fractional assets back together if the asset is bought or sold. It's just that economic right, but perhaps not the underlying intellectual property or the right to the music itself.
Well, and I'll just add on to that. We're also seeing this in other spaces where there's a division in terms of governance and economic rights, and being able to sell the economic rights. Now, this has been done in finance for a very long time, but doing it at scale is what's really interesting.
Yeah, and I think, to that note, right, I think we've all seen very similar issuers come across our desks, but there is like a varying degree of how each of these issuers is looking to achieve their goal of like syndicating albums, individual songs, even sort of, artist revenues, and then the level of maturity as well. But it looks like they're all, looking to achieve a very similar goal of like democratizing access, activating a fan base, et cetera.
Yeah, we're seeing mainly catalogs right now. There's no reason it couldn't be songs at one point in the future. And I think there's other things you can start doing as well, like tying it in with NFT drops. So you've got, an NFT plus some, streaming royalties or music royalties from the song. Maybe you get, first dibs at new concert tickets, stuff like that. There's a lot that could be added on and like held in someone's wallet. So I think it's a very powerful, vision of the future for these types of assets.
I think we have time for one more question. The gentleman in the back there.
So these are all registered offerings through regulated issuers. How do you think about solving the problem of the marketing problem? This is crypto, which I would say broadly steep returns really isn't.
One thing I'd say to that too is just for clarity's sake, most of these are exempt offerings. They're exempt from registration. They're non-registered offerings. And in that way, those exemptions give issuers a lot more latitude in the way that they can market and to whom they can from whom they can accept investment to that point. Totally. And some of those exemptions, like for example, Reg CF is a notice filing. And Reg D is also a notice filing. The SEC doesn't need to qualify those offerings before they go live and start accepting investment. And in that way, there is more latitude for issuers for how they can go out there and accept investment and the structure of the investment versus a Reg A Plus, for example, where you actually do need qualification from the SEC to make before the offering goes live, such that that's closer to a registered offering or like an IPO where there are a lot more restrictions about the way that you talk about it and the actual structure of the asset.
Yeah, and really the compliance department at all of our firms are working with the issuers to make sure they're staying within the bounds of whichever product they're choosing.
Yeah, and just to kind of hone in that marketing piece, we kind of have a number of issuers that have utilized third-party marketing firms to try to get in front of the widest audiences possible. And then, each of them has very unique takes. Each of these individual third-party marketing firms have unique takes on what that issuer should do to kind of activate those different potential investor bases, and that's something that we defer to those third parties for the most part, but have to review from a compliance standpoint.
Okay.
Did that answer your question? Did you say crypto?
He said not getting lumped into crypto.
I'm sorry?
Not getting lumped into crypto.
Yeah, I mean, I think I can speak from our own experience, but we spend a lot of time deconflating those two concepts and really talking about how we work within the regulated securities framework. We work with securities that happen to be in a tokenized or digital form. I'm sure you guys do as well.
Well, we get issuers on both sides, issuers that say we want to go out there with an asset that appeals to the crypto community, and in that case, we actually can lean into the marketing of it in that way. But then also, like we're seeing tokenization just as a tool to make liquidity, to offer more liquidity or secondary access or secondary trading, or to make payments back to investors more feasible. And in that way, the tokenization element can definitely take a back seat, and it's not out there in the marketing at all. But we get issuers that are looking for both, so leaning in and also like backgrounding that piece of it.
And with that, our time is up. Thank you so much for our panelists, and thank you guys for being here, and enjoy the rest of TokenizeThis.